Ladies and gentlemen, I'm here with a very interesting topic today. So I'm going to talk about when is it the right time for you to move your stop loss to break even so that you can avoid letting the winning trades turn into losing trades. So for that and more, watch the rest of the video. Have you ever wondered which one is our preferred broker at M&A Forex Traders? Well, wonder no more. Morgan Market is our preferred trading broker for Forex. So here are the reasons why you should be able to trade on their platform. All right, they offer up to 1 to 500 leverage. Their minimum deposit is only $50. The sign up process is quick and easy. They offer 24/7 client support. They have tight spreads, no slippage. Guess what? Their deposits are instant via crypto, fast withdrawals, and over 200 tradable assets. So check the first link in the description and sign up with them right now and get trading. All right, so let me just show you before all this happened. Let me just show you what we're looking at and everything. All right, so you can see that yesterday I was able to share the forecast right here, and you can see that this was NZD USD right here. So we had a nice drop based rally, and then we had liquidity which was left behind at this level right here. And then on top of that, we saw the market taking out this liquidity, the market coming into our nice rally based drop supply zone, where we had a nice order block right here. So we're waiting for the market to come into our zone, and then so that we can actually buy. So our top loss was 4 pips and our target was 75 pips, right? So let me just show you what happened afterwards. So the market came to our level and we were able to take this trade right here, and we shared this trade with a private community right here. And then this is what happened, right? So after we shared the trade, the market came nicely into our zone right here, and guess what? It decided to push to the upside, and it actually went. So if you bring this right here, it went up to somewhere about 1 to 4 risk to reward ratio right here. So depending on when you took this trade, because of time differences, either would have entered late and all that, but this trade right here went up to 1 to 4 risk reward ratio. And then something happened, the market started to reverse, and then eventually it actually went all the way down, and it came to our take profit, to our stop loss right there. So those that didn't move the stop loss to break even were tagged out for a loss for a trade that actually went over about 1 to 4 risk reward ratio. So how do you avoid this happening to you? How do you avoid letting winning trades turn into losing trade instead of it at least being a break even trade? All right, so there are a lot of ways to actually manage trades. So like one of my favorite ways of actually managing trade is when the market goes into your area, right? It starts to respect your area and it starts to go in your direction. So one thing you can do is that you can wait for break of structure. For a particular case like this one, you wait for the market to change the direction, and you want the market to break structure. Like we saw here, the market came to our level right there, and then it went to the upside, broke these highs right here. So the market made a lower low, lower high, lower low, and then it broke this lower high and made a higher high. So right here, when the market breaks this level right here, you are supposed to move your stop loss to break even. Okay, so when the market breaks the recent formed higher low in an uptrend, you move your stop loss to break even. When the market breaks the most recent lower high in a downtrend, you move your stop loss to break even. So in this case, when this level is broken right here and the market pushes to the upside, you move your stop loss to break even so that you avoid a winning trade turning into a losing trade. So another way of you actually moving your stop loss is when the market, for example, in our case right here, this trade was a 1 to 15 risk reward ratio trade. This was an absolutely a good trade, right? So if the market, for example, goes 1 to 3, let's say 1 to 3 or 1 to 2, for me, I actually encourage you guys to move your stop loss to break even once the market has gone to 1 to 2 in profit because of our risk reward ratio. Others may actually move the stop loss when the market just goes 1 to 1. But for me, I encourage my students to actually move the stop loss to break even when the market has gone at least 2 hours in profit. Then you can move your stop loss to break even, because it's not fair for you to let the 4 hour trade turn into a losing trade. So that's not acceptable, right? So this is for you, all you guys who are asking questions. How do I move my stop loss to break even? When do I move my stop loss to break even? What do I have to wait for? So two things, right? You can either wait for price to go at least 2 hour in profit, especially for those that use our strategy with the higher risk reward ratio. At least wait for 2 hour to risk reward ratio, and then you can move your stop loss to break even, or wait for price to break the recent higher low or the recent lower high in a downtrend. Then you can move the stop loss to break even, so that you avoid letting winning trades turn into a losing trade. Better to get a break even trade than getting a losing trade right here. So all this is something that you can never anticipate. Like, you never know what's going to happen. So for you, what you can do is that whenever the market gives you profit, starts to go in a direction, it goes to 2 hour, you move your stop loss to break even, so that you secure yourself. All right, but don't be quick to move the stop loss into break even, because sometimes the market is going to come back and retest, and then can continue to go in a direction. And then if you're not on the chart at that particular time and it takes you out, you'd have lost out on a good winning trade that would have continued to go in a direction. However, if the market takes you out and you're actually at the chart and you're seeing the market starts to actually reverse after taking you out, you are obligated to take that particular trade, because that's what the market does sometimes. The market will just come here, push to the upside, and then reverse, come into your area right here, starts to reject, and then can continue to go to the upside. If you're taken out and the market is still within your area and giving you signs of it actually going in a direction, go ahead and take the trade. Make sure you put the stop loss where it's supposed to be put, right there, because the market is going to do that. And in our strategy, most of the time we use what we call the aggressive entry. So we use the aggressive entry for entries, and when the market goes in our direction, it goes. Sometimes it will come back, and when it comes back, we use what we call the conservative entry. Now we wait for the market to change structure, and then we can jump in to actually take the trade for the second time. There's no shame in doing that. All right, so these are things that you can never actually anticipate. You never anticipate. You never know when these things are going to happen. Like always, you never know what's going to happen. So what you have to do first of all is make sure that you really accept the risk. Calculate, predefine the risk, and accept how much you are standing to lose on that particular trade. Like I've shown you in the past, no matter how good the setup might be, no matter how good the setup might look, there is absolutely no way for you to know in advance what's going to happen. So it's all about playing the long game, playing the probabilistic, having the probabilistic mindset where you're looking at a series of trades. It's very erratic for you to actually judge yourself after taking 2, 3, 4 trades, because that's a small sample size for you to judge yourself. So take a series of trades and then look at them afterward. Don't judge yourself after taking 3, 4 trades, right? Because in those moments, anything can happen. Literally anything can happen. So for us, we're all about having those, executing all our setups, all our setups that actually meet our criteria. We take all those trades, and then we know that we're going to have losses, and we actually accept that in advance, because it's going to happen and we have no control over that. And then we just keep on executing our strategy, because we know that we are going to be profitable if we continue to do that, while predefining our risk and really accepting and internalizing the risk of that particular trade before we actually take it, because that's how you become a consistently profitable trader. And just like Trader Tom puts it, the best loser wins. So make sure you know how to lose, handle these small losses, so that you can enjoy those bigger wins when they come, right? And that's how it is. So remember, move your stop loss to break even when the market breaks the higher low or lower high after your entry. your most recent higher low or lower high when the market goes in your direction. And then number two, you can actually move your stop loss to break even when the market at least goes at least 2 hours in profit. Move your stop loss to break even so that you can actually secure that trade. All right. So I hope you found value in this video. If you did, make sure you subscribe, like the video, comment in the comment section. Until next time, goodbye.